I'm very pleased to welcome today at MIPIM Dr. Thomas Beyerle, who is the Managing Director of IVG. Welcome to MIPIM.
Thanks.
Well, look, let's just talk a little bit about your business. For those that aren't familiar with IVG, just tell us a bit about it and what you're doing here specifically at MIPIM.
Well, IVG is the main stock-listed company in Germany on real estate, located in Bonn, which is the former capital of Germany. So you see a little bit on the background and history of IVG, former state-owned. We'll be nearly 69 years old, so we celebrate our 100th anniversary in the next 4 years. Main business of IVG are two main things, which is on one hand, investment in real estate, which means special funds in Germany, closed-end funds, and asset management. And the second column, which is a little bit out of real estate, it's called infrastructure/cabins. So we have a little stake in the energy business from a view of a real estate investor.
So, look, if you were looking across your business and across the European market, what are the big issues do you think are facing the property industry today?
I think today it's still a situation where you see a huge realism coming back, coming back to reality. This means all these good old times in 06, 07, and 08, they're really vanished, which means now you have really a reasonable environment for acting in. On one hand, on the other hand, I think there are still things going on called debt crisis for the next years, to be honest. Means you see a wider disparity within the European community or Europe in total as a real estate hub. There are for sure some strong countries like Poland, like the Scandinavians and Germany, and I wouldn't say the rest, but then it takes a little bit of time if you see the next steps, following by UK and France, and then the Southern Rim, which means all these, honestly speaking, called pig states, which sounds negative. It's really not a good environment right now. So the disparities between Europe will get wider and wider for the next years.
But in this environment, even in an environment of stagnating growth, real estate can be a sort of a beacon in many ways, and in fact it can often thrive in that type of environment. Do you see, even if we're looking at some extended periods of lower growth levels, that there's still going to be great opportunities in the real estate sector?
Absolutely, because I think from the historical average, thinking and making investment means the average performance for real estate office core is around 5. I guess it will be going down to 3.5, which is the translation for there's so much money in the market to be invested in real estate. The prices get higher for this core environment, and this is for real estate people. It's a good environment, but for people from the asset allocation side, which have also equity and fixed income on their balance sheet, it's a fantastic environment. And as long as you have a positive yield gap to the 10 years Treasury bond, let's say, then it's a fantastic situation right now. But again, it's still stimulation driven, reasonable investments, yes, for sure, but there is the human factor, I call, by reading too much newspapers and hearing too much these sentiment things early in the newspaper.
So can you talk about some of the big trends that you see in sustainability and what are some of the new emerging technologies that you think are going to be very important in the future?
I think it's, again, an impressive scenario we saw the last 5 years, starting with all these Club of Rome discussions, let's rescue the planet, which is okay for the first step to get a wider information for the industry. Meanwhile, I call it not realistic, it's still performance driven, which means green means to earn money with this, to see it in the performance of a property, of a fund, let's say, and we open this door and make the first steps in. Let's say if you want to make activities on the green field, you have to accept that you have to earn money with this and not to rescue the planet, honestly speaking. The second thing is for sure the main important thing for the whole generation and the people on the earth. But from the real estate perspective, this is an absolutely positive background scenario winning back for us, because I think we have to do a lot of things, and the main thing is reduce energy consumption in all these pretty nice shining buildings, labeled or not labeled. It's not a question. And I guess in some years the LEED fetishism or the certification fetishism will vanish. It's a normal standard tool. The question is, what is more than just saving energy? And this is, I think, the main question driving the market in future for us. At this stage, at the market environment, I think just the companies who consult and advertise how to get a certification, how to reduce energy, they earn money, but not huge investors, to be honest. Due to one main reason, there is a limited number of green buildings in the whole market. on one hand. On the other hand, there is a massive volume of money outside making investment in green funds. And this is for an analyst, this is a perfect storm. It's wonderful, you have so much money, so little property, and this increases the pressure on the existing portfolios and the stuff 60s, 70s years going back, fantastic, really fantastic.
Now, just in terms of the European sector vis-a-vis some of the other growth areas in the world, particularly Asia seems to be a growth engine at the moment. What are you seeing in terms of, you know, investor focus? Are you seeing a shift now into Asia?
Absolutely, especially when you look, let's say, next 10 or 20 years. It's more than a shift. It's a change of paradigm in the globalization of real estate business. We all know all the increasing stories on Asia, which is fantastic, positive. But meanwhile, it's really measurable, and this will go on the next 5 to 10 years. So what we see here at MIPIM, let's say, we see a limited number of Asian investors: Singapore, Japan, China. But I accept there will come much more in future. Vice versa. This means a lot of German or European investors have to find solutions or just to survive when they make the second step into Asia. First step was 2006 and 2007, which was probably too hot. But now the markets in Asia have a special kind of stability, no really overheating scenarios, except the bubble in housing in China, which is not a strong bubble. But again, this is we come really closer together than ever, and this is, I think, a big shift in knowledge, but also a big shift in investment activities from Europe to Asia and from Asia to Europe.
So you expect to see in the next 5 or 10 years that there's going to be increasing European investment into Asia, yes, and vice versa, increasing Asian investment that perhaps is even looking into Europe? Absolutely.
I think going back to the last 5 years, when most of the European investors make their first step in Asia, which means realistically it was Tokyo and it was Singapore and that's it. Let's go to China a little bit and so, okay, look around, but there were really no investments because the market don't have such kind of stages of evolution like we expect from a European perspective with a long history, to be honest.
So, just in summary, some of the big trends that you see are going to be shaping the property market, particularly in Europe, in the next 5 to 10 years? I
think change in geography, which means Asia, vice versa. Second thing is to rebuild or to set up new standards for inner urban living, more than office for sure, but retail and residential, these things. The third thing is all what I called sustainability in the wider spectrum, with a huge leverage on all these energy activities on that. And the fourth thing, might be not a huge one in this situation, it's the demographic change. I don't mind the big figure, I mean much more how can we bring people to real estate industry as long as they get less and less. And so this is for me one of the main challenging, call it social, environmental activities, and this will be probably in one or two decades a huge problem for the industry to find well-educated people who wants to work within the real estate business.
Well, thank you very much for your time. We hope you've had a productive few days in MIPIM, and we are sure to see you back here in the future.
Thank you.